so much, Ed, and thank you all for joining us here today for a session on emerging issues and product development strategy here at AAIS. It's been a very busy and interesting year on that subject, and we're really excited to talk about it. My name is Patrick Sullivan. I'm the Engagement Manager for Personal Lines here at AAIS, and joining me today are John Kadous and Phil LeGrone. If you guys want to introduce yourself, John?
Hi, I'm John Kadous, and I'm Vice President of Personal Lines and Auto and Head of Product Strategy at AAIS.
And I'm Phil LeGrone. I head up the Data Engineering and Actuarial Services groups here at AAIS, and I'm also responsible for our data strategy initiatives.
Thank you guys again for taking the time out today. I think, with everything going on this year, it's going to be an interesting discussion. I think we can't get away from discussing everyone's favorite emerging issue this year, which is COVID-19. In previous sessions, we've discussed specifically how we're addressing the pandemic, but I wanted to touch upon our kind of methodology and thoughts around it and how we've approached it. And I know, John, you had a number of thoughts on this as leading our product development and product strategy section. It's something that has come up quite a bit in your world. And I was wondering your thoughts on COVID as a big emerging issue and kind of what questions it brings up in your mind when it comes to insurance.
Sure. So COVID-19, obviously, it's a huge issue. It's, you could say, all-consuming when you look at what's going on across the not just our industry, but really across the world today. And I'm really curious about some of the long-term impacts. What are the things that we're going to see? And of course, there's a lot of different opinions that are out there. One article that I was just reading recently, I thought was really interesting, and they had interviews and opinions from a number of different experts kind of across a large spectrum. And the first thing that was on there that really I've been very curious about myself is what's going to happen with remote work. Mm-hmm. So at AAIS, we're a remote organization, but I know that not every place is, and a lot of you are working remote now, and you may not have done so 2 months ago. And the question really, is remote work going to become the norm rather than the exception? Because it really hasn't been predominant, but it might become that way. So if it does, what does that mean for you individually? What does that mean for your exposures as an individual employee who works from home now? Also, from a company perspective, how does that impact business exposure? So what changes are out there, what changes will occur, I should say, over time with regard to working remote? Will we see a large increase in it? If so, we know that's going to make a dramatic shift in exposures, and it's something that we're all going to need to address. We also can't help but look at the transportation industry and what's going to happen there. I still see an occasional jet passing overhead.
They're fewer and farther between these days.
Yeah, I don't think there's nearly as many of those Southwest jets flying overhead, but I can guarantee that there's not nearly as many people on them as there were in the past. So what's going to happen with transportation? And part of that also, you go back to the question of, are more people going to be working remote, and is that pulling vehicles off the road? If so, that's another impact that we're going to be seeing. Does it make more sense suddenly to make a transition to a telematics-based program as opposed to more standard pricing? So these are just a couple of things that are out there kind of in my mind at this point in time. A couple of things I hadn't really given a lot of thought to until I was reading through this. One other thing in particular is, we've seen this migration to the cities for a number of years now. And Patrick, I know you've talked about this a couple of times, mm-hmm. And how there's this great market for renters that was moving into the city. And well, now the question is, will they be moving away from those more dense downtown urban areas just literally for personal safety, not because they're concerned about gang exposures and things like that, just from a health perspective when you think about a contagion like this. So again, just a number of different ideas are out there, and that's not even touching on the direct impact on businesses and the changing business models for a lot of companies that are out there that suddenly find themselves in the delivery business, whereas they relied on customers walking through their doors in the past and what's going to happen there. So, there's obviously more questions than answers right now. As an advisory organization, our job and your job also as the insurance industry is to really understand these trends and respond in a way that is fair and protects the consumers. And historically, these trends have kind of evolved over time. And what we're seeing now is a sudden event that could cause a rapid shift in a lot of these different areas and require a much more rapid response from us than what we've traditionally had to concern ourselves with.
And I wanted to add one more point, that something that John touched on was people working from home a lot more. Well, when I think about fire risk for homeowners, usually you have your largest fires when no one's there, because it's allowed to grow, develop unabated. So in the future, if a lot more people are working from home, they're there when there's a smell of smoke or something left on the stove and they can act on it. What is that going to do to fire risk over time for homeowners? How is it going to change over time? Like John just said, this type of thing usually evolves over time. And in this case, the evolution was in a matter of weeks.
So, I think across everything you just mentioned, I think when you think of work from home, I immediately think of cyber insurance and the increased risk there when it comes to people working outside of the office. I think about the urbanization trends to predominantly city and first-ring suburbs took a generation to happen, and you can see that coming on spool pretty quickly, or at least a change in what the second ring and more rural areas are like. Maybe you're going to see some resurgence there. It's distinctly possible. I think John's point on restaurants, was very clear. And Phil, once again on fire, building trends and the expansion of housing construction and the rise in severity has been a multi-generational change when it comes to fire. And potentially now with frequency having declined over the last 20 years and severity risen, maybe you're going to see a flattening of that curve, not when it comes to COVID cases, but when it comes to fire severity.
Could be.
Which I think leads us kind of to our next point, is COVID isn't the only thing we've really come across as an emerging issue that AAIS has had to deal with in the insurance industry as a whole. I think, John, I know one of your favorite topics is the changes in Florida with AOB is something that's been a major project for us to address.
Yeah, absolutely. Assignment of benefits in Florida has been it's been a huge issue there for the past several years. And it's something that, as we started working on our Florida Homeowners by Peril program, we wanted to make sure we were addressing all of the unique issues of Florida. And this was very high on our list. Unfortunately, as we dug into it, there really wasn't much that could be done until the legislature passed some laws with regard to assignment of benefits, because it was essentially codified black letter law. So we had to face the issue as other carriers did, but then that changed last year. So in the spring of 2019, the Florida legislature passed a bill. The governor signed that into effect very quickly. And what that did is that totally changed the world in terms of assignment of benefits. And to kind of give you a little background, I pulled a few excerpts from actually a presentation that Barry Gilway, who, if you're not familiar with Barry, he's the CEO of Citizens. But he had a few points in here that he had put together that really summarized the issue. And he gave this presentation literally just a couple of weeks before the legislature passed the bill. So, and keep in mind that this is predominantly just for non-cat water. That's really where the majority of this is coming from. But the average loss, typically, I should also explain that typically these cases are represented by attorneys. And what we see in this is that the average loss is about 5 times what it is for a non-represented case. And over a 6-year trend that went through 2018, a 285% increase in the average loss.
Wow.
Overall for non-cat water is a pretty huge loss. So, when we saw the legislation come through, we started working. We had already gotten approval on our program, and we dove in and said, all right, we're going to need to modify this and get the product in market that the market is in desperate need of. So we went in, we made changes. We actually were the first ones to file anything on it with the state, which in this case meant we had a little bit more back and forth than we would normally expect to have. But we ultimately ended up with the proper language in place to address the situation. But what, in addition to having the right language in place, what we were really proud of was the fact that, we were first to market on it. We were the first ones to get that change in place.
Yeah, that was an exciting process. And, unfortunately, I think, it's going to be a while before we see another 1-800 Ask Gary Stadium when it comes to trial lawyers with AOB. You're talking a lot about water damage there. And one of the things that we've discussed a lot this year is the oldest emerging issue, which is flood insurance, where, over the last couple of years, we've seen a rise in interest in the privatization of that market, release of more data. And Phil, I know it kind of falls under your world, where two kind of more interesting data sources that have become available. One, pertains to flood insurance. The other one pertains to fire protection class. I was wondering if looking at those risks, if you could kind of discuss how the emergence of the FEMA data for flood and the Insurers data for fire has kind of changed our approach from what historically was to what it's becoming today around data strategy and product development.
So with regard to flood, as you referred to, I think rightly, as the oldest emerging risk, since it's been born on the back of the NFIP for so long, there's definitely been a reticence on the part of insurers to jump in the pardon the pun pool and start writing the coverage. But what has happened, obviously last year, that FEMA did release their claims and policy data, which dating back to the 70s, the data was made available to current time. And I really applaud them doing that. But I will also say that you can't just build pricing straight off the back of that data. It's actually not granular enough for that, but it is useful, and it is helpful in understanding the enormity of certain events that have happened in the last 45 years or so, which is great, but it's really not that useful for getting down and dirty on what should the pricing be, what should my underwriting strategy be. And I think that has held back insurers from writing more of it, and that the move toward privatization has slowed for that reason. But over the last few years, some of the leading catastrophe modelers have tackled this. AAR, Cat Risk, and NRMS all have U.S. flood models now, full probabilistic ones that they can match up to those historic events, that can match up to the FEMA flood data as well, to calibrate their models and get a good fit, and then they can go back and build that, or insurers can build that into their pricing approaches. So that's been a major development, I think, in the market, and one that will speed up the movement toward more privatization. With regard to the fire protection class that you touched on, that is sort of a emerging issue in another way. It's emerging because the solutions in the marketplace, including our own, to quantify the public fire protection component of fire risk, are very antiquated. They're simple surveys, simple couple measurements to quantify that part of the overall fire risk, which is actually quite complicated. You're talking about firefighters, you're talking about fire stations, the apparatus they are using, and very importantly as well, the exposure that they're protecting in a given geographic area. And these vary quite a bit across the country. And to boil it all down to some simple measurements and some simple survey questions, while those questions may be valid, is simply not enough. A lot more is needed in the form of data, in the form of treatments of that data in a predictive modeling environment, pointing toward claim severity to get a more refined answer to that question. And that's something that we've been working on the last couple of years now, and we're actually at the point now where we can actually deliver it within one of our model programs.
Well, and what I find interesting about the conversations we just kind of had on Florida and about flood and fire is it feels like we're armed now with, either from the data side or the product side, the tools to really kind of look at how we develop products and change that to reflect kind of the emerging issues we're facing today. It's no longer, we have a decade to figure out, how renters insurance is changing. It's especially with COVID and with other issues, this kind of need to move a little faster. And John, as head of product, I was curious on how you're kind of putting all of these pieces together to come up with a strategy that is relevant for today.
Well, it's complicated.
Yes. Anything is complicated. It's insurance. Yeah.
Yeah. Well, let's start with really defining the why. So why is it, why do we need a product strategy, and what is that product strategy all about? Well, it kind of has to start with really, why are we doing it? What's driving us? And first of all, as I've said before, we are a member-based organization, and those members who we serve are the ones who help guide us in our direction. And we listen to our members, we listen to the larger market. We've got advisory councils that we've got set up, and actually 6 different ones across our product suites. And we listen to them and we hear, what are the challenges that are out there? And what are the opportunities that are out there? Of course, there's always challenges from competition. There's always challenges from just the fact that we're a highly regulated marketplace, and consumer preferences. Sometimes those present challenges, sometimes those present great opportunities. We also have observed that one size doesn't fit all. So in the past, when you thought of an advisory program, you thought of a program that was done, set of base forms, and then we'll do some mandatory endorsements on each state to make it fit there. But really, there's geographic differences that sometimes require you to go beyond that. Mm-hmm. Also, there's a real demand for flexibility. So within that, I'd say a large part of that is when we make a program, we know that there are some members who are going to pick that up and use it right off the shelf, and that's great. There's others, however, who are going to want to take that program and they're going to want to put their own touches on it and really make it a very company-specific kind of program. And they need some help in order to get it there. Not necessarily doing the work on endorsements and things like that, but actually having a base product that they can take and modify easily, as opposed to having to totally re-engineer the thing. So really, that need for products that are adaptable by a company. And the other part that goes hand in hand, when we think of that, oftentimes we think of it from the forms perspective, but it goes well beyond that. You look at the rating side of it as well. And just as an example, as an advisory organization, we don't build credit into our models, into our rating plans. But there's no reason that it should be difficult for a company to do that. In the past, generally, somebody wanted to implement credit or make some other kind of change. Okay, you kind of did have to do some re-engineering to figure out where exactly to plug it in. Going forward, we've got the ability to make that easier. I'm not saying we're going to say, yes, here are all the variables, because there's a multitude of different credit models out there, a multitude of different driver scores that are out there. So we're not trying to, steer anybody towards one solution or another. but rather create the rating plan that has the ability to plug those components into it with the factors that you think are relevant. So that's kind of a long-winded why we do it. So, the actual strategy, as a modern member-centric advisory organization, our strategy is to provide our members with high-quality advisory programs that are member-driven, tailored to market needs, flexible, and supported by partners across the P&C ecosystem. And it really breaks down into three key components. So the first of those is we're moving towards a modular program format that facilitates rapid development. So that facilitates our rapid development of the programs, but we think that also makes it much easier for a company to be able to modify it to make it their own as well. It also supports regional differentiation, which is something that we've seen definitely there's a need for in the marketplace. Customization, I kind of touched on that already, but also the other part of this that is, I think, really, groundbreaking is it allows us to really look at our products more across the suite as opposed to looking at an individual program. So by creating a program on a modular basis, we may find, or I'm expecting we will find, modules that will work for multiple programs across the suite of products.
Yeah, I know that we've been able to bring innovations from one line to another pretty quickly. When we find flaws that really work in the commercial lines program, we're able to bring that to personal lines with relatively little pain, and that's been exciting as we talk to our members.
Yeah. So you look across, just kind of throwing this out there as an example, that you look at a homeowner's policy and you look at coverage A. Basic coverage for the structure itself. And then you look at a farm owner's policy. Is there really any good reason that those two would be different? Probably not, or there may be some minor variances, but not a lot. And quite frankly, dwelling also goes very closely along with that. So why do we have three very different approaches? Because the three programs were not developed together. They were essentially created as separate programs to meet a very specific market. Well, I can tell you there's a lot of companies out there that write homeowners and also write farm owners and also write dwelling properties. And for simplicity within that company, sure would be nice if that definition lined up. So that's just kind of an example of what we look at with that modular format. Also, another key component is a sophisticated, adaptable rating that leverages innovative data solutions, modern analytics, and what I'll term as flexible deployment options. And by that, I'm talking about our product deployment platform, that we deliver content through. And that gives you the rating content structured however the heck you need to have it structured to get into your policy admin system. And of course, the rating programs themselves are built leveraging some very innovative data solutions. Phil was just talking a little bit about public fire protection. That's a very different way of looking at it, and some very different data sources than historically have factored into the equation. And last but not least in that is broad program support that is provided through a robust partner network of support organizations, as well as, of course, our AAIS advisors. But so what that means is we're taking a real hard look at our associate and alliance programs, and really looking to see where help is needed by the marketplace beyond what we've got in there today. And where can we provide more solutions, more services, more backup for companies to be able to be successful using programs, A, getting them in market, B, being able to handle them in their policy systems, being able to handle the claims that come down the road, renewals, the whole work. So being able to really provide support as needed for our member companies. So just to kind of also touch on where we are today, this is kind of it's a multi-year effort. It isn't something that you can get done overnight, obviously. We've made some good progress on it so far. We've got to engage regulatory community, and some of that has already occurred. More of that needs to occur to really get them to understand where we're going with our basic product structure, what we're doing that's different with that. From a process perspective, last year at the main event, I talked a lot about the advisory panels and getting them set up, and we had some folks raise their hand and say they wanted to participate, and we're happy to have them on board. And those advisory panels are going to continue to be a vital source of information. From technology perspective, we implemented Libraria a couple of years back, which is just a lifesaver in terms of the ability to manage our data, manage our information around the actual policy forms. Many of you have seen what we've been able to produce in terms of side-by-sides, leveraging that capability. It's also helping us right now to really identify what are some of the common clauses that are used frequently, what are some of the preferred ones that are obviously court tested, that have stood the test of time, and that may be a starting point for us as we develop products going forward.
Well, I know that we're not the only ones engaging in this process. As I've been out in the marketplace, the type of strategy and the things we're discussing here, I think we've heard from our members is something everybody's doing. Everyone's looking to do internally, especially as you were discussing the kind of need on some companies' behalf to kind of customize advisory programs to fit their risk appetite. That the same approach we're taking to modular programs when it comes to building out rating variables is something we're seeing happening internally as well. So I think that's one of the other drivers of this strategy is we know the market as a whole needs to respond to risks faster, and that we're doing this right there with everybody else because we know the market needs that.
Yeah, absolutely. Speed to market is critical, and as we, as you look at our strategy and look at the areas we're focused on, it really is about getting a differentiated product that you can customize and do it quickly. So speeding up that process.
So going back to everyone's favorite emerging risk this year of COVID-19, I think, Phil and John, I'd love to know your thoughts on how COVID fits into our strategy. And as we've prepared for this, we kind of thought about it as, this fits really well with what we're trying to do when it comes to strategy. So I don't know, Phil, do you want to begin the discussion there of how we're approaching COVID and how it fits in with the overall strategy John has kind of laid out?
Yeah, so just with respect to the data piece of it and moving as quickly as possible, clearly we don't know what the claims are going to be from this. That's a very controversial issue, obviously, in the regulatory community, in the at the federal level as well, potentially at the federal level. So we don't know that yet, but that doesn't mean with our product strategy, that doesn't mean you don't do anything. You don't wait for the smoke to clear and then figure out what happened. You start to dig in, and at a minimum, you start to dig into what are the data sources that are out there and learn those data sources, talk to the experts on those different data sources that can help you quantify how big is this? How big is the breadbasket? How big could it get? And from that, how eventually what will evolve is how do we shave that back to what is really happening as we learn more. But you can't do that at the end and work quickly enough to develop something that's useful. You have to do that as it's evolving, as things become uncovered. You have to be learning the whole time and being faster and faster at absorbing new information as it comes in, so you can then apply it in a way that's meaningful in the end for decision making.
Well, John, I know we're in the middle of this still, but I think one of the things we've talked about is the different options when it comes to policy language and forms. I know parametric insurance is something you're passionate about and see an opportunity here. For your side of the house, how does this fit in with the product strategy you've outlined?
Yeah, when I look at when I look at current events, COVID-19 in particular, in context of our product strategy, I think that there's a lot of opportunities that will come out of this. A lot of obviously, we're anticipating there's going to be some change. We don't know exactly what all that change is going to be, but with our product strategy really aligning us to be more responsive, be able to make changes more rapidly, to be able to address these issues even more timely than we have in the past, there's a lot of opportunity to leverage what we're doing, regardless of what the outcomes are in terms of changes across the ecosystem. So, you mentioned parametric. Yeah, I have a really strong interest in parametric programs, and there are challenges with parametric programs today, because you kind of generally are going to be presuming a loss, and that's something that most regulators prefer to see, that there actually was a loss, and I obviously understand that. But to what extent do you change product features based on some triggering event? There may be opportunities to be parametric in that regard. So, just as an example, I very briefly touched on the fact that, this has had a profound impact on restaurants so far. And there's a lot of people out there who, in order to keep their job, they made a transition. They made that transition from being a waiter to being a driver, a delivery driver for that same restaurant. And I'm sure they didn't, the first thought that crossed their mind wasn't, I wonder if I've got the right insurance for this. And, that's something that we build that into, personal auto policy, a parametric trigger like that. So once when a governmental action is implemented, then your coverage will shift so that you can do X, Y, Z. Yeah, we can do it. I mean, like I say, that's just one kind of example, but I think there's going to be a lot of other opportunities out there. And again, as we see how this evolves, we'll likely see some other opportunities out there across different program suites for us to do something. And, potentially leveraging OpenIDL as we do that, I think would be a tremendous thing for us.
Yeah, we've discussed telematics as something which has long been on people's radar, but this might help bring that to a critical mass. I mean, there's just so many different options out there that I think, back to Phil's point, a few minutes ago, you have to start looking today, start working on things now. Otherwise, by the time you get around to it, the crisis is over and the risk has changed and the damage is done. I do want to kind of staying on that topic and pivoting, I think, over to Phil and talking about data. What has happened in the last, let's call it 5-10 years when it comes to data? I know before InsurTech and disruption was the big buzzword. Everybody was using big data this, big data that. That was, really the buzzword of the industry. And it feels like there's been a shift where that's becoming a more important piece of the industry again, as large data sets emerge and are able to be used in a different way than they were in the past to become more effective. When you're looking at your data strategy when it comes to product development, what's really changed and what's happening in your space that's driving a more adaptable, a faster, more flexible approach when it comes to product?
Well, certainly, I don't think it's any mystery the explosion of data that's been happening over the last decade or two. But there's challenges with harnessing that data and actually leveraging it into a decision-making framework. And that's how we've jumped into the big data world, is to work on not just collecting the data, but also having a solid technology base and an expertise of resources in-house, particularly on the actuarial side, to actually be able to turn that data into a predictive model that you can use and you can refresh with new data as it's coming in. So over time, you can pivot as the risk is changing and provide better and better decision-making tools for the industry. And that's something that we've been very well positioned to. We've got a data lake. John just talked about the open IDL environment as well, which I think is another enabler, especially on the security side of sharing that data to work us toward faster and better models in the long run. And when I think about fire protection or COVID, some of these other things that we are talking about, as the landscape is changing out there, a predictive model is really what you want to pump in updated data as it's becomes available, and figure out, how's the landscape changing? How should we look at this risk differently from how we looked at it before any of this started? Mm-hmm. And our focus has been not only getting as much data as possible, but understanding that data so we can use it correctly. I have a opinion that there's no bad data out there. Well, the only bad data out there is data that you don't understand. If you understand the data, then you know how you can use it and how you should not use it as well. And that is the key. And that's been one of our main mantras is, you get the data in, try to understand it, talk to experts, build your own expertise on the data so you know how to use it.
Yeah, the question becomes, what is the question that I can ask this data specifically, rather than tell me everything. There's a very specific thing that this data set can do, and I need to figure out what that question is.
Yes. You mentioned earlier in the conversation the INFRS data, National Fire Incident Reporting System. It's a great data set for certain things. It's the fire department is putting in their reports about fire incidents in there. For just structure fires, over 1 million different records per year in the United States are going into that data. We've collected that data going back about 11 years now that we've used to inform our public fire protection model. But there's certain fields in there that you should not use. And they are very tempting that you would want to use them, but learning more about how they're populated, who they're populated by, we've realized those are off limits.
Yeah. What's an example of one of the fields that looks good but should be avoided?
Well, probably the poster child example is the actual fire loss dollar amount.
Yeah.
So that is put in there by a firefighter. And I'm sure some of them have a decent idea of what the losses will be, but I doubt most of them do. And they're not claims adjusters. They don't know things about topics like debris removal, things like that. They need to take into account. So they're giving it their best guess, but it may be 3 a.m. when they're sending in that fire report, and
they just want to go home.
They just want to go home. Yeah, in the end, that's not really their job. It's a component of what they do to fill out the report. So that's just one example where once we've dug in with the experts and learned more about how that field is populated, realize, okay, cordon that one off. A lot of other great things in that data set, so don't get me wrong, and it is very valuable for many other purposes, but not for quantifying the loss amounts.
Yeah. Well, I think, based upon, I think, our conversation, one of the things I want to touch on is kind of bringing this all kind of together. We've discussed the data piece, we've discussed the product piece, and John, I was hoping you could kind of discuss how both those things came together in kind of our first run at implementing the strategy with the Florida HOBP product. Which we've spent a lot of time on, and I know there's been a key project for you, but to me really feels like the first step in launching this is something AAIS is doing across all of its products, and hopefully the lessons we've learned and our experience is something our viewers can take back to their companies and learn from us and bring some of this knowledge home. So can you tell us a little bit about how that's been done with Florida HOBP?
Sure, absolutely. Yeah, Florida HOBP, it's interesting when I look back on it. I mean, we started this work out. I had a good amount of familiarity with the Florida homeowners market from the carrier I worked with before I came to AAIS. Also, Robin obviously had a great deal of familiarity with the Florida marketplace. So we kind of knew what we were looking at there, but there was still a lot that we learned. And well, the first thing was what people were patching together, what insurance carriers were patching together to deliver the product to the consumer was a challenge. And it was difficult to read because there were so many endorsements that were attached to the base form. It was just very complex. And
Franken form is the term we've used in turn.
Franken form, that is the term that I heard from one of the companies we were visiting with down in Florida one day, and that just really stuck. But you can imagine that base form with endorsement stacked on top of that for every time there was a legislative change that there was an opportunity to benefit from. And I mean, I can't even tell you how many pages were included in your average homeowner's policy, or how many steps you had to go through once you read it in the base contract. Then you found a mandatory endorsement that addressed that. Then you found, the different components that added on to that. And actually, what we found as we went through it is, at the end of the day, they quite often didn't really deliver what we think the insurer intended for them to deliver. So that was really what we saw. We also wanted to make sure that we had a good amount of data. We were able to get that from a couple different sources, and then just really figured out, what do we need to do here? We know it's different. We know that the catastrophe exposure in Florida is huge. We know that the competitive environment is vastly different because it's not dominated by the large carriers that tend to take a lot of market share elsewhere. It's really the domestic companies in Florida are the ones who are really leading the market there. And of course, the biggest challenge we've talked a little bit about already was just the litigious environment out there and how that was being exploited through assignment of benefits. Just as one example, the largest example, but one of the examples of the impact of the litigious environment. So we wanted to make sure that we had something that really more specifically addressed those needs that we were seeing. And so what we did is, instead of taking that tried and true national advisory approach and saying, here's the base form that we use everywhere else, we're going to use the same thing in Florida. I'm not going to say you started from scratch, because we leveraged all of the work that we had done over multiple years of maintaining that homeowners program, but tempered that with what we saw going on in the Florida marketplace to really tailor a product that was very specific. So when we talk about within our product strategy having that regional relevance, this was really the first product where we did that. We also took a look at the rating plan and said, that rating plan is great in Illinois and great in a lot of states, but it doesn't really fit for Florida. So we needed to do something different there. So we did. We changed up perils and really changed the approach of that. And at the end of the day, what we were able to file and get approval for is a product that is easy to read through, as easy to read through as an insurance contract can be for a consumer. There's not a lot of flipping back and forth. We really eliminated mandatory endorsements on it by virtue of the approach we took. Even when we made the change in assignment of benefits that I talked about earlier, we didn't create an endorsement to do that. We said, you know what, Florida OIR, you guys have just recently approved this for us. We're going to make this change. This is what we're going to focus on. And that was, that's why we were able to get that change implemented in the base form, is because we had, discussion with the regulators there as well, and engagement. So anyway, at the end of the day, I think we've got a really good program and a really good first foray into that true regional program and that first step in our product strategy.
And I think before we discuss what's next in terms of where we're looking to go from here, I kind of wanted to go back to Phil, because one of the things when it comes to regional programs is, Phil, we're looking to bring the fire protection class you've been working on for the last 2 years to Florida. Now, I was hoping you could kind of speak to a conversation we've been having around the Florida data you've been utilizing, where we're not bringing a national fire protection class model to Florida. It's a model that fits just with Florida data, the same way it fits just with Ohio data, and so on and so forth. So we could speak to that a little bit. That it's not just the Florida HBP program where we're bringing this approach, but also with a fire protection class.
Yeah, I think it kind of the variation on a theme we've been talking about, about staying as current as possible.
Yeah.
And flexible as possible. When we set out to build this public fire protection new methodology, we didn't just focus on one state and get all of the data we can in that one state. We got data for 50 states. We built a model for 50 states, or let's call it a draft model for 50 states. And then now, down and dirty, focusing on Florida HOBP for the first model release, and refine for that release to get the best decision-making tool we can for that. But then when we switch to Illinois or California or whatever comes next, we're not starting over. The model, the data is there. It's just refinement and get the best fit from that point. So it gives us a lot more ability to quickly pivot to other regions and other lines of business as well. So that's a big part of our data strategy is don't take a siloed approach to that development or the data collection side of things.
I think that's true. Everything we've discussed is, we're not taking a siloed approach to things.
Right.
Siloing it for a second, though. John, when we're looking to where we go from here, now that fire protection class is underway in its development in Florida, and Florida HOBP has been approved, what programs are we looking to bring these insights to next?
Well, the short answer is everything, but next steps, I'd say, well, first of all, the next step has already been taken. That next step was really Canabop.
Yeah.
So Canabop, a very specific market, a program that was tailored to that market, and now we've been able to take that program from California and push that out into some other states as well. And beyond that, I'd say really the opportunities abound. I mean, what is of real interest to me is getting into farm owners and looking at farm owners under this same kind of approach. So, and when you think about farming, and you think about, I grew up in the Midwest, a lot of corn, hogs, soybeans, all that fun stuff. And farming in Iowa versus farming in, say, Florida or Georgia or Vermont, there's some real differences there, and the exposures are different. So absolutely. I think there's an opportunity there. It feels like just a natural for that geographic specialization. Certainly you could benefit from simplicity, and we talk about the modular form language. As I said, what we do on homeowners, a lot of that I think will fit right into farm owners. Mm-hmm. Not everything, certainly. There are definitely some exposures that the typical homeowner doesn't have that you find on a farm. But there's a lot of opportunity there for us to leverage content across product suites. And like I say, that one is high on my list.
Yeah, I think you could say the same, Phil, for data and your approach there of, you build the larger data set and you drill down, be it hail data, be it, I don't know, the risk of maple syrup futures declining in Vermont.
The casting the wide net is critical, and getting data in the door that you don't even know what you're going to use it for is something that I think is a great idea. Just get exposure data for regions that you can figure out how to leverage as you understand it better on down the line.
Yeah, I really like that, because you may find something in there that really is revolutionary, something that we hadn't even contemplated, and that's one of the really cool things about the work that you're doing.
Well, as we begin to wrap things up here, do either of you have any closing remarks you want to share?
Just really quickly, I guess I would say that what we're seeing, what we're seeing out in the marketplace is that I talked at the beginning about consumer preferences. They're changing rapidly, and also their expectations are changing rapidly. So that's a reason, one of the primary reasons why when we look at our product strategy, when you really look at what we're getting at in there and the focus on speed and the ability to make changes rapidly, that's critical. It's been critical in the past. It's going to be more critical going forward because that's what the consumers demand. And if the consumers demand that, as insurance carriers, the marketplace has to deliver it. So we've got to deliver to support them.
And just on the data side and the predictive modeling side, just wanted to highlight, it probably comes through during our remarks. It's an exciting time to be in this industry, and with the explosion of data and technology and getting the right expertise to throw at the problem to answer questions that haven't been asked before, and get to a position where you can come up with pretty reasonable answers pretty quickly. It's exciting, it's challenging, and we actually relish the challenge that we're in the middle of.
Well, thank you guys again for your time. I'm excited to continue working on this project with you as we see what trends emerge in 2021 and beyond. And thank you all at home for taking some time to watch this. And if we're all back in our offices, thank God. Thank you guys very much, and hope you guys have a great rest of your meeting events.